TGIF Warriors. Hope everyone had a decent week. Be grateful if you did. How you doing today, Michael? Kman? James, how's it going? Patrick, Kurt, Marcus? NASDAQ is stuck. Hi, Laura. Okay. Kman, I see you're here today. Any comment on this article? BlackRock Man Group reveal big Japan bets before BOJ decision.
Yeah, I see this is more and more people piling into the trade. We had a GG news out this morning as well that the Bank of Japan is preparing to possibly go next week. They even say like they're finalizing stuff to go next week. We had the Rengo union results out, which were good. The workers should get around 5.25%, 5.28% wage hike, which is all positive. And then we see the yen not responding too much to it because a lot of people have already front-ran the trade. So now, to me, it's just a wait and see what the Bank of Japan really is going to come up with, because now everybody has already prepared it. Now let's see if the trade pans out. And it could take a while before it actually does, depending on what they say or do. But yes, I've seen that article as well. Yeah, I mean, people are in the big Japan trade. Well,
they're buying the yen, right?
When people like Kman and BlackRock come out with that means that they've been preparing or been building up that trade for weeks, if not months, right? So we know that investors are positive Japan for the foreseeable future.
Okay, so to me, it was really a week about yields.
Yep.
Okay, and it looks like the bonds are going to try and recover. I remember on Tuesday, CPI, Nick was helping us out because I couldn't talk all day, and he was anticipating a breakout. And even with the headache, I had to say that I thought we were going to trade back down towards the bottom of the flag, about 50% retrace of this. So, we're about a little more than halfway there. We're getting a bounce today. Let's take a poll. Who thinks we're going to hold here? Here's a 4-hour. High or low? And who thinks we're going to take out the January lows? That goes out to you, attendees.
Yeah, I mean, you're probably looking at well, perhaps that is a bigger move than what's happening on the yields now. This afternoon depends on what really the Michigan is going to bring us, I guess, on the inflation expectations. That's could be your trigger to get back up above that 430 to the 435 to 440. That is really the zone that needs to cap now. And then we likely going to stay in ranges, and that probably should mean the end of the little dollar rally as well, because everything evolves around yields and what the equity markets do on the back of it. And FX is, let's face it, FX is still, apart from some positions being shaken out, FX is still very much a spectator of everything, right?
Yeah, I mean, we're getting a little reversal day. I mean, if you're a dollar bear, this is not a bad place to short it. You're wrong on a close over 380. That's my pivot. When you find a number that works, stick with the girl that brought you to the dance, okay, until it stops working. So worked on a sell. If we get back above 103.80, I think it's a different ball game. And if that happens, I think we're talking about, 105.80, 106. So we'll see. Anyway, this just could be a little ABC, and we're going to puke again, but we'll have to see where yields peak. We could go to 460 in the 10-year. That'd be about 61.8 back. The other big story of the week is silver really taking over leadership. Okay, so there's the silver chart, but you can really see the gold silver ratio collapsed. Okay, so that's silver outperforming gold this week in a big way. So, there have been a few signals around this pivot. You know, you're you're long over the 88 and you're short under 88. So another good pivot there. And then I think the last big story is Bitcoin, which I think has topped. And I think before this correction's over, we'll see 40K. So that's a nose for Pinkert for you.
Mm. I made
So
a joke about it in our room yesterday because I did my first transaction actually in Bitcoin, just um, having some Bitcoin. It's not even, a speculative position or so, but yesterday I sold a little bit of Bitcoin out, and that was around 71, 72K. And I said, like, well, watch this. This is the top. It was like really a joke, but we're already 4,000 lower. Quite
yeah,
funny.
nice. So what do you do it through CFDs or what?
No, no, no,
What?
no. It was just like, getting from a little Bitcoin that was sent to me back into fiat. I'm still a fiat believer.
Oh, I'm just wondering. I mean, there's so many different ways to trade it. I was wondering
Oh,
what
it's
you.
not even trading. It was just a pure coincidence. It was around the top.
Okay, so you shorted Bitcoin.
No, no, no. But I mean, those stories that we had, and I don't trade Bitcoin, but those stories that
Okay.
we had when we broke the prior high in the next 3 weeks, for 2 months, we are going to double the value. I think it sucked a lot of people in, and they really are going to have to see it much higher than to stay in the position, because we know it can be a bit nasty. But when people say like, oh, every time it broke a high, it doubled in a very short order, I think it sucked in a lot of people. So it's a bit of a dangerous trade in my opinion right now.
Okay. I'm going to be patient for gold to under 2100. So what's your take on euro? I think it's kind of a mixed week.
Oof.
We are here on a Friday. Red candle.
Euro dollar is more a tool to do crosses in my opinion than anything else. But the rally the dollar rally selling mode that we have seen over the past week or so, that has been broken a little bit yesterday, and therefore any decent numbers that are going to come up, whether it's in, well, the Empire State Manufacturing Index is very volatile, but especially in like an hour or so, those IP Michigan, if that comes out a little better, I think the dollar could end the week on a positive note.
Well, it looks like it is, unless it reverses, because I have red candles in cable too. I have red candle in Aussie too. So uh, it was a positive week in the dollar. I just want to bring up the pound for a second here because to me it almost looks like, well, you got to do it on the daily, that we almost had a false breakout over these highs, right?
Mm,
And we took them out, cleaned out all the bears,
yeah.
and this could be the high. And if the dollar really gets going, I know, this looks like earlier in the week, I'd be thinking about buying this pullback here in both cable and euro, but I'm a little hesitant to do it because I think there's a possibility that if the dollar turns good back over 104, if that happens, I think you could take out this low in cable.
And you know what?
So
There's also people, and whether you believe it or not, but people are looking at it, and the seasonalities are all against the dollar, and that means higher sterling, higher Aussie, higher Kiwi, higher
Yeah,
you name it, and well, silver and metals as well. But perhaps the metals are a little bit more responsive to those seasonalities. But I think a lot of people have anticipated this, and they may be forced to rethink if the dollar does not give it up second half of March, right?
yeah. Okay. That kind of covers the week that was. I think that used to be a TV show, the week that was. So NASDAQ was pretty wild yesterday. Was down sharply. Still hasn't made a new high. Dow did make a new high, but look at that wick. Someone's a bag holder up there on the opening. Um, so NASDAQ still looks heavy to me. You know, I think it's important that it didn't make a new high. And what is even more telling, at least short term, not talking about a crash, is what happened to Russell. So, I think you have two drives here, right? Here's one, here's two. So we pull back and should get another one. But that looks like, you know, and sometimes it doesn't take three. But I think this was a damaging day for the Russell and most likely an ugly week after not
Isn't
much of,
that isn't that
huh?
roughly the same as what we've seen before? There's this certain level on the US yields when where they go above it, finally the equity market reacts, and could be
Yeah,
this four and a quarter on tens, or back above the dot plots on the twos, and it does seem that equity markets are responsive to it. Stay below 420, stay below 4 on the 10, stay below 460 on the twos. Everybody's happy and happy to continue to buy equities. Get above that four and a quarter in the tens. It's perhaps a different story. And I got the impression that, and it's been the same on the dollar yesterday as well. And I've got the impression that the markets do, because it's still a yields thing, like Stella also said, but we have been saying that for months, if not a couple of years now. Um, and they are reacting to certain levels, right? So if, for instance, this afternoon you plunge back below 420 on the tens, you're probably on your way to a new high in the S&P. That's how it seems anyway, just looking at the global picture.
yeah. Well, this chart to me, the regional banks, compared to what the S&Ps did. I mean, look at every other weekly. It's rocket ship, kind of a rocket ship, and kind of a bear market rally here. So when you look at it, doesn't look great, the Russell. So uh, on a daily, on a weekly, all it did was retrace.
Hey Dale, can you
Yeah,
go back? Yeah, just to that chart right there. Look at all the lows back in 2021.
yeah,
Those
160.
lows, yeah, we had a false breakout. This is actually a chart that I brought up on our setups last night for the trade-off show. And it's just it's a market that's really underperforming. And I think if banking issues continue, you see the SOX, the semiconductors
Yeah.
are breaking down. A lot of the SOX are in that
But doesn't
index.
this look like just an ABC after a breakdown and it
Yeah,
rallied back? It couldn't even get back to the breakdown,
yeah.
which was
I
up
mean,
here, and we're rolling over.
yeah. I
So
mean it.
maybe what we had in March last year is going to happen again because if we take out 44, I think new lows are coming, and I've made some pretty good forecasts looking at RSI's confirmed lows over the years. And there was no divergence at this bottom. It was a confirmed low, which implies another low is coming that may or may not confirm. So Make sure you're not leaving a lot of money in regional banks right now, even though
Absolutely.
you're
I think
guaranteed.
I think the commercial real estate issue is going to be it's going to be one of those issues that's long, drawn out, and a constant issue for years to come, in my opinion.
Yeah.
So, and it's going to weigh on that, not, the banking sector, but also the, a mid cap stocks for years to come. And anyway, but
And everyone's really getting, is very bullish of Russell. I think
oh,
guys like what's his name, the bull that Mark went to work for.
the bull that Mark went to go work for.
Mark, I used to interview him. He's not out. Newton.
Oh, gosh dang it, what is his name? Lee.
Yeah,
Lee.
with the dark hair. He was talking about the Russell doubling.
You wanted to
this
say
year.
the Asian guy.
Tom Lee. Yeah. So anyway, perma bull, and really thinks that the big money's coming in Russell's. To me,
I'd beg to differ.
Yeah, and then you had Josh Brown talking about Russell yesterday, right before the puke, the day before yesterday. That's where people need to go. So
he's got the golden touch. Yeah.
Yeah, he's a reformed broker, which means he was in reform school.
All
right.
Anyway. That means he's in sales, and he does a good job on it on CNBC.
Yeah,
so
yeah.
Anyway. Yeah. So
ahead,
hey, well, hey, let me take over real quick, Dale, and I want to thank you for bringing up all the subject matter that you have thus far. I do want to extend our conversations about the BOJ though, and some expectations from next week, because next week's a busy week. We've got central banks galore coming out, and I think that we need to have a little bit of a discussion about this as we go into next week. I know today we do have some Empire State manufacturing data that's coming out, I believe, right at the bottom of the hour, and then we're going to have industrial production a little bit later, and University of Michigan consumer sentiment and inflation expectations will be out as well. But I want to go to we've heard a lot from Kman, and I still want to hear from Kman regarding the BOJ, but I want to hear Ryan's take. I got an opportunity to listen to the very tail end of the Flow show today. One of the benefits of Europe not changing their clocks, or everybody else basically not changing their clocks until the end of this month, is that we have a couple weeks that I get to listen to the tail end of the show. So Ryan, let's bring you in and talk a little bit about your thoughts on what's happening with the yen here, because after these negotiations overnight, as Kman was bringing up, and I agree that a lot of people are trying to get in front of this move, or probably have for the last several months. What do you feel about or how do you feel about the yen, and what do you think is going to happen with the BOJ next week? I mean, are they going to actually pull themselves out of negative rates next week? And no Ryan.
Hello.
Oh, there you are. Okay.
Yeah, I'm here.
Sorry,
I
was here.
Testing 1 2. I hear you.
Yeah, I fat fingered all my screens earlier. I wiped everything off. So
this is what you get when you fat finger the markets.
Yeah, sorry. Yeah, it definitely looks that way, because we've got enough stuff coming in. The wages are ticking the boxes. We do have to remember that they have to think that inflation and the economy is going to be okay as well, particularly inflation. That's still got to tick the box for them to make the final decision. But as far as wages goes, that's all well and good. The market's got itself all balled up for March. In terms of the price action, we're not seeing yen pairs falling anymore, because the flood of headlines, as always, is now overkill. Every day we get 2 or 3 pieces saying they're ready to go in March, ready to go in March, ready to go in March.
Really prepared the market, right?
Yeah, there's only so many times the market's going to trade that same headline.
Right.
We had the big move down from the 150s. That looked to be the market getting ready for the BOE, for the BOJ. So now there's nothing extra coming from that. You got a few people covering. You got a few people just saying, right, well, we know where we're positioned now. We're not going to do much more. But in the case of dollar yen, we're all also getting into the FOMC orbit now. That's next week as well. The data's coming out. So for dollar yen, we do find that we switch between trading Asia yen and then we trade the US dollar, obviously in the US session. So there's been a bit of a switch around, but I'm still thinking it's a bit of a buy rumor, sell fact coming in for if they do move next week.
So what the
That's
hell
the BMJ.
happens? What the hell happens if they decide to forego this month and they wait till April? The yen is going to get absolutely slaughtered.
With me and Kay are at slight odds of this. Yes, if the market is heavily priced in March and they don't do anything in March, then yeah, the yen's going to move, but it's not going to be that big a move if they say, all right,
you got to sell the 150, right?
We're not going to cut this month, but we're definitely going to cut in April.
Right, you got to sell 150.
Yes, potentially. Well, you got to know what the Fed's going to do after that.
I like that, Blake.
It's not a blind trade. If Powell comes out after the BOJ have not hiked in next week, and Powell goes, you know what, this higher for longer might be higher for longer, then you might be trading 152s. So you can't just take one side of the trade. On the yen basis, yeah. On the dollar basis, that's another thing. But yeah, I expect yen pairs to rally if they announce they're not going to do anything in March. But then how far that goes depends on what they give as forward guidance for April.
So there are still banks out there still hanging their hat on April. It's not a foregone conclusion yet. I mean, obviously the BOJ is preparing the market for a move, but it isn't a done deal. So now obviously if that happens, I would be looking to sell a rip in dollar yen. And you're right that the Fed is also in play, and there's other central banks in play as well. So, let me go back to Kman really quick. You've got so many central banks in play, nor just central bank, Banxico, some of the currencies that we discuss a lot inside of the ForexAnalytix community. If you guys don't, aren't seeing like our conversations of everything that we talk about, it's in the community here. But when you're discussing all the central banks that are meeting this next week, Kman, which ones really jump out at you? Because there are some in play, there are some not in play.
Yeah. Well, obviously the Bank of Japan and the FOMC, but another one could be, Banxico. We know second half of March, a bit of seasonalities as well. If they stick to where they are right now, that is probably going to be pretty decent for the mix as well. They're all important, and one where I have absolutely no clue is the Norges Bank, because the Norwegian kroner is not acting at all with the rally in oil and gas prices.
Right.
It's actually weakening the Norwegian kroner, and that's a very strange one. So that is one that I'll gladly just watch for Norges Bank first, and then see the market reaction to decide whether there's anything to do at all. But because this has been a very, very strange currency to trade, yeah. But then, yeah, of course, I mean, Bank of Japan, that's going to be a big one. And to me, it really matters if they send the signal before the end of the fiscal year or in the new fiscal year, because if they send it now, it's a different message, and it also gives the Japanese insurers, the investors, the Japanese whales like GPIF and stuff, they give them a month more time to prepare into the new fiscal year to make decisions on their JGB holdings, which then will affect the whole bond market in the US, Eurozone especially, but equally so in Australia, for instance, where they also have interest. So to me, it's whatever they decide, whatever they come up with, it's an important meeting. Yeah.
So and I think Dale, you said it. You said it perfectly. This market is moving based on yields right now. We've seen a big move in in yields this week. I think it was more unexpected than anything
Yeah.
for a lot of traders. Again, I was watching from afar since I was on holiday earlier this week,
From a
but
bar?
from a bar afar from a bar. Well, yeah,
You weren't far from a bar.
I wasn't
We,
far from a bar, but I was far away in a bar watching
yeah.
all this. But this move, I think was pretty aggressive this week, and we saw yields, rally, bonds, take a nasty dump, and I think you're right. It's the market is really driven by what's happening in yields. So let me ask you guys this, and Ryan, let me go back to you on this one. On the Fed, do you think the dollar's got some juice in it? Because I think the market is actually really, really little lofty here in the euro, trading around the 109 level. I think 109, 110, whether it's here at 109, what we tested today, or we can reach all the way up to 110. I think that we are in an area, a sell zone in the euro. I think that you want to be a seller up here. I don't believe that the eurozone economy is deserves to be up. Wow, the euro deserves to be up here based on central bank, just monetary policy divergences. But what do you feel? How do you feel about the dollar here and where we stand with the Fed?
Well, firstly, the euro dollar deserves where it's to be where it is. That's where traders want to take it. Irrespective of what we think of it.
Yeah.
It has been surprising why it's been so high, but we've had it's all about the waves between the cut trade. Who's cutting first? The Fed have slowly, everyone looking at cuts. We were pricing 4 or 5 cuts. Now we're pricing 3 cuts, pretty much in line with the Fed. Even some people pricing the potential for hikes to come. So we've got this constant switch around of expectations. I think that given the data we've had, CPI, and that sort of bounce back in the retail sales, the market's going to be thinking, the Fed are going to have to delay when they cut again, or they're going to look for power to say such. And it's a sticky job for him. And if he does that, then we're probably going to see more upside for the dollar, more upside for yields and stuff. And, we're going to have to wait a bit longer for these cuts. Conversely, if he says, no, we're going to, cut middle of the year, and we haven't really had a date from them, then the dollar's going to get sold off. So it's really a coin toss at this point. But the market has loved to hit the dollar. So I would not be surprised if we get a rally into over the Fed and then that gets hit afterwards.
All right, and Kman, any thoughts on the dollar before we go into this data?
Yeah, rangy, but I think the shift has operated again, and I was saying that yesterday. The rally sellers need to rethink a little bit, so it could be a deep buying mode for possibly into the Fed if we don't get any accidents. But we had all the main numbers out, right? Only the Michigan this afternoon probably is going to cause a wave or two. But we may be now rather in a buy the dip scenario until the Fed, and then we will see. That's sort of how I look at it right now.
I'm with you, man. I'm totally down with that. One last thing. I know you guys talked about it at the very beginning of the show. We do have the data coming out. I think everybody's got to be very careful with Bitcoin today. I know you guys talked about it right at the beginning. It's just Bitcoin looks very vulnerable at this point. So I'm going to pull up the data flash. I'm going to drag that over really quick. I know this is not going to be big tier data. It's not something that should move the market aggressively, but we do have Empire State Manufacturing data coming out. So let's see what the reaction is here. This is a 15-minute chart and the dollar. Oops, I just didn't mean to do that. Where's my
very
flash?
jumpy? That Empire State number, very, very jumpy.
Yeah, let's see if it comes in a little lower than expected. Anyway, S&P is right in the middle. We got 10-year yields over here to the right. Bidding up into the data. There's the US dollar right over here, and we'll see what that data comes out as. And then remember, we do still have more data today, but we're going to have to leave you.
Minus 21.
Wow, look at that. All right. Well, we should see yields drop a little bit here, and then you might see the S&P bid up, but
How come
I don't know, maybe
they're not dropping the 10-year?
Yeah, maybe bad data is not bad. Maybe bad data is bad for stocks. You know, whenever we get in that world, that'll be interesting. Not a huge reaction. A little bit of dollar,
Wow.
a little bit of dollar selling, but not
It's
huge.
a very, very volatile number.
Yeah, I mean, look, yields continue to march higher, and the dollar sell-off was very limited. So, all right, well, Dale, I know you have I know you're bringing in somebody.
You talked to Zach last time.
Oh yeah, I did talk to Zach. That's right. It'd be a great interview. I hope you guys enjoy it, but make sure you guys are around for the F.A.C.E show. I know you're listening here right now. Just continue to listen here and be here on Wednesday. Wednesday, we have a huge announcement here with the ForexAnalytix crew. You know, big changes coming, and we want you all to be the first ones to hear about it. So you have to be just listening live on Wednesday. Now, Wednesday is going to be a big day because we have the Fed anyway, and we have so many central banks next week. So I know you all will be here. So just make sure you stick around. We're gonna you know, go past the F.A.C.E show and talk about what's upcoming with our organization, and we are very excited to make that announcement. So
Blake is going to make a run as a third-party candidate.
That's right. That's right. I'm gonna do it. I'm gonna be like,
I'm behind
come on,
you,
I'm
man.
half their age.
I want you to appoint me to the Fed so I could close it. All right.
Ryan for Fed governor, bringing him in.
All right.
Bringing him in, Ryan.
He's a foreigner. Can't do that.
I don't care. Hey, they do that crap every central bank.
Oh yeah,
they
that's
bring
true.
them all from all
you
over
can
the place.
recruit them. Yeah.
Yeah.
All right. Anyway, look, it's already catching on. Blake for president in the chat.
Yeah.
The banner's going. The banner's going.
All right, guys. Hey, Ryan, Kman, thank you guys for all the coverage this week. Dale, thanks for being here, and you know, you're in great spirits today, and I hope that continues. And thank you everybody for being with us all week. And next week's going to be a big one. So
next week is critical.
It's always
like
critical.
every week.
Every week is a big.
It's going to be a very critical week next week. All right. Anyway,
for the time being, Dale, we are critically neutral, right?
We're strongly neutral. We don't mess around even with neutrality. We say it with conviction. Anyway,
have a great weekend.
Kman, have a great weekend. Ryan, gosh, Uriah Heep. Ryan's a metalhead, guys. You know.
Yeah, Saxon, Uriah Heep, Judas Priest, all in one show on this Sunday.
Yeah, so I tell you what.
Is it this Sunday, Ryan?
Yeah. Yeah.
Oh, you're going to be a train wreck on Monday. Thank goodness you're not going to be.
That's why I'm off Monday, just to let you know.
Oh, he won't be able to hear for a day anyway. So, you know, have a good time, Ryan.
Thanks, mate. You too.
Blake, have a nice weekend.
Thanks, guys.
All right. Listen, Zach, you're not letting me promote you to a panelist. You keep declining. Accept it. There you go. Accept
it. Have a great interview, Dale. Thanks, Coach.
Love is acceptance. Thanks, Blake.
Sorry you know about that, Zach? I was enjoying looking at Blake's screen. I was like, what's this block in my view of Blake's charts?
Yeah. What was it?
It was the box trying to make me a panelist.
Oh, that's what happens. Okay. All right. It only took me 3 years to learn that. Thank you, Zach.
Thank you.
I'm very low tech. I mean, no tech. Welcome
it's okay. Back. I work with Avi. He only just switched from a flip phone like a year ago.
Oh God, yeah. And my email is at AOL. So anyway, we're the same generation. What's on the docket, buddy?
I was enjoying looking at some of the things that you guys were talking about before, and be happy to give my take on it. Thank you for helping me switch from Monday to Friday and being accommodating. We were spent a few extra days in Florida after we went down for a bat mitzvah.
Okay, yeah, they're always fun. I went to the best hotels in Chicago at 13 years old for every weekend I had a couple to go to. It was really a fun time trying to steal screwdrivers from the bartender. Anyway, Zach, so why don't you share your screen? And I did catch your comment when I brought up TLT, and you think they're going to hold here.
I would love for TLT to hold.
Okay.
There we go.
So you think that maybe this was about it on this climb in yields? It was kind of a surprise for most people.
I don't know if it's it altogether. Well, we can take a look at bonds first.
Okay.
And then I do want to talk about RSP and some of the stuff in the market.
Okay.
So I think we're at least working on a larger bounce in I look more at bond futures because we have a lot of our members that trade that versus trading the yields.
Yeah.
So in terms of the retrace from the move off of the October low, we came into the top part of the fib zone at a 382 retrace and a nice ABC correction that we followed down. It played out perfectly, but you know, if that had stretched a little bit more towards the 116, then it'd be a little bit more reliable as all of this B wave. I'm going to give it the benefit of the doubt, and this looks like a 1-2 start to a larger wave 1 of the C wave that I have pointing up towards the 140 region. But it is possible that we get stuck in the 124s and then have to come back down to test that 116 to 113 region as a wider flat. Since I think
what would open you up towards the scenario where we take out the B low? Wouldn't that still be corrective?
Yeah, I mean this was enough for all of this orange B wave, and if we take out the March low, then there's a good chance we're heading at least to 113, if not maybe down towards 110, and things start to get a little bit hairy if that starts to accelerate. But we got let me go to my larger time frame here. I mean, we have a pretty significant 5-wave move down. And in the grand scheme of things, Garrett leans more to that being all of the 5th wave and 5 waves down. But even in that more bearish scenario, this really isn't enough of a reliable bounce. So maybe we get that deeper retrace down to the 110s, but we should get more of a corrective consolidation before, you know, Armageddon and bonds comes. And counting this as that cycle degree wave 4 here to get all of the 5th wave is small. So either you're dealing with a deeper than ideal consolidation for a 4th wave, which is where I lean, or a much smaller 4th and 5th to complete the whole pattern off of the 1980s.
Okay. Appreciate your look. That's what makes a market.
Right.
You're always reassessing like we all are.
Yeah, I mean, pretty decent retrace. Let me clear up some of this stuff down to a 764 here. So if we're holding for whether it's higher for the B wave or for the third of that larger wave 1, you know, we should be holding this 118 200s now. And that would be the very first indication that maybe we're heading down towards that 113 to 110.
Could the spark for the next bond rally be risk off?
I think so.
Or are they both trading risk on?
So I see things more rather than looking for specific correlation. I mean, in sometimes with regard to the dollar, I look at correlation to the dollar as you have things that are priced in dollar terms. You know, so if the dollar is going to be stronger, then you're going to have weaker price in dollar terms. With things like bonds, you know, there is capital flow between different asset classes, and it used to be a pretty direct correlation that bonds were the risk-off trade and that people flocked to that safety. That kind of disappeared a little bit when yields were so low. People were looking for safety and things. You know, they didn't want to just park their money and have it, especially when the Fed's inflating it away. But I could see that coming back. You know, that flight to safety. You know, especially with yields it at reasonable levels, in the fours and fives, to lock up some money for, 3, 5, even 10 years or whatever. Like it's not unreasonable to do that with a portion of your money that you want to think you're putting away for safety purposes.
Okay.
So I wanted to talk a little bit about equities. And the last time I was here, I'm gonna see if I can pull up
Be about 3 months ago.
yeah, it was at the beginning of December. I had a saved chart, and I can't seem to grab that screen.
You have to stop sharing
Oh, that's not
sometimes
it.
and then go to that screen.
Oh, and then go to a different thing.
Yeah.
All right, let's try that.
See, we taught each other how to use Zoom today.
I know. There we go.
What a collaboration. That's not working either, huh?
No, I'll
Really?
just show it on the chart that we were looking at there.
Okay.
Let me go back to the RSP. Sorry about
So it
that.
was probably inaccurate. You were probably bullish and it went to your target. It's my guess.
No. We were at the beginning of December, we had to count this top in the RSP. The RSP is the equal weight version of the S&P.
Right.
But we're noticing some very significant divergence there versus the skew in the S&P itself. So we had this lower high here, which ideally counted as a B wave after getting 5 waves down off of the January 2022 high, to a deeper consolidation than was reliable as any kind of fourth wave in a move higher. So we had a pretty significant move down, and then we had a pretty weak bounce as a possible B wave that needed to count as a more obscure WXY pattern. But we did have 5 waves down from that, and a possible ABC retrace into the beginning of December at a lower high. So that was a spot where we could be pretty bearish, and we're started to get a little bit of a move down there, but it quickly invalidated. And so there was very, very good risk reward at the beginning of December, being bearish, as long as it stayed under that July high from a year ago. So
you can't step into
Garrett and I
the
are always
ring.
looking for.
You can't step into the ring and not expect to get hit.
Right. So there's a couple of things that we had some good bearish setups on. Some of those got a little bit more of a move down from beginning of December, but and a lot of things invalidated, and we got this massive extension, which on the RSP very easily still counts as either the B wave. Just B waves, as we know, an L8 wave can make nominal higher highs, and this just barely has made a nominal higher high. And it can also be that alt fifth wave of the same primary wave 5. And so we do have 5 waves up that we can count off of that October low now, as this bigger ABC move up, whether it's the parentheses 5 or the parentheses B wave. There's a little bit of room for more extension. So I really like the way you put it, that you were very aggressively neutral. So no support's broken yet. There's no clear setup off of a high, but there's a number of sectors that Garrett and I are looking at that we're very, very concerned about. And in general, for equities, the risk skew is very unfavorable right now. So there's no clear setup to be aggressively shorting yet. There's some speculative plays out there. But everybody should really be on high alert for, another start to a
Is
move
this
down.
whole thing an expanding flat? Is that the right terminology?
So expanding, I mean, I think that's possible for a lot of things that we look at, where this is a larger third and this is the B wave of a wider fourth wave bounce. I'm going to go over to the S&P because I think it counts very differently at larger degrees. So it's harder to call that an expanded flat. It looks more like this is just the fifth wave extension of the primary wave 5. And this is 5 waves up, completing off of the 2009 low. Make this a little bit bigger here. So this was deeper than ideal as the fourth wave. It also was easily 5 waves down. So to count that as a fourth, it has to be a very obscure triple combination pattern instead of a leading diagonal down. But this was largely fueled by tech, and this part of the pattern as an ending diagonal extension matches very closely with SMH and XLK, the general tech and semiconductors specifically, to fuel that extension, which makes sense because of the Magnificent Seven and NVIDIA and everything else. So,
Okay, what would
but in
give you a
terms of a
sell
larger
signal?
degree,
Are you looking
at
for
this point,
yeah, go ahead.
At this point, I think the first indication is probably going to be a break. The first clear break of support is going to be a break under like the 4930s in the S&P.
4,800 prior high.
That's where it starts to get, where it starts to get too deep to be another fourth and a fifth wave extension on this chart. On RSP, I think that was what we were looking at just a minute ago. 162s on the RSP is really where it needs to hold to get the smaller degree immediate extension. But starting to see a lot of different divergences on different time frames, and it's very, very concerning.
How about the
and
Russell?
In terms of larger, oh yeah, so you guys were talking about Russell a lot, and let me go to the back adjusted. I think that's, I don't see how anybody's looking at the Russell as being very bullish. It seems to be the most clearly divergent of all of the major indexes. There was a good chance that this was all of the B wave as a triangle, and we got 5 waves down from there, and a very clearly corrective start into and a little bit of extension there into the last time I was here. That got blown out in favor of the wider flat. And this definitely is an expanded flat for the B wave off of, there we go. Off of the June low from a year and a half ago, or 2 years ago, sorry. But 5 waves up completing, and very much into the normal resistance region that we see for a B wave. It's significantly divergent lower high from where it was back in the end of 2021. And I think I forget who it was that I saw talking about it. But the Russell seems to be kind of like a doomed index in general. That you have anything that is like SMCI that shows promise and gets bid up to graduate to more than small cap, gets moved out of the small cap index, and then you're left with junk again.
Yeah, a lot of regional
not to say
banks.
that there aren't good companies in there.
Yeah, a lot of regional banks.
that was another area.
And that looks very ugly to me. It looks like just an ABC we had, and we're rolling over again.
Yep.
You think you see that
it
too?
Couldn't even get a fifth wave up. Yeah, the KRE index couldn't even get the rest of this fifth wave up towards the 618 retrace for the B wave. That to me looks like it's incredibly weak if it's going to truncate in the fifth wave of a C into that fib resistance zone. And so the downside projection on something like the KRE is pretty nasty. A measured move, well, it's not going to be all the way down there.
Bankrupt.
Measured move is going to take it down into the 20s, into the low 20s.
Yeah. Okay.
That's not to say that there aren't a couple of good banks out there.
Yes. Well, where are they? I'll move my cash there. What bank? Where do you bank?
I found
I know
National
you told
Capital
me,
Bank. I mean, obviously,
you told me Avi's doing a piece on safe banks.
he
right?
did. He's doing a lot of research. There's a guy he got to do a lot of fundamental research to really comb over the balance sheets and find some that are have very, very limited loan exposure and are focused on keeping customer deposits safe. I stumbled upon National Capital Bank a couple of years ago. They're local to the DC area. Not as convenient as going with like a Bank of America, but you know, they do have some online banking and stuff as well, but they don't lend mortgages to anybody who isn't a depositor. They're not and they're not going out doing a bunch of risky commercial real estate and stuff like that. But
Maybe you could send me that
XLF, another
piece.
one that, yeah, of course.
Email it to me.
Of course.
Thanks, man.
So there's a few things on in the XLF, like JPM looks like this is a larger A wave and a B wave, and it's working on a C wave to get a slightly larger version of this primary wave 5. So it can get a fourth and then a fifth wave higher. But the XLF and a lot of the big banks definitely look like they're coming into more significant tops. Again, there's no support broken yet.
Right.
So, you know, we're going to look for that first 5 waves down and 3 waves up to be a smaller degree 1-2 start to a possible wave 1 of a C wave down before we start to look to short anything. But certainly some concerning looks out there in the equity land. We also just talked about XRT. And you know, it fits very much with like the small caps where this is significantly divergent at a lower high from highs that we had at the end of 2021. Very indicative of a B wave into normal resistance zones that you'd expect for a B wave.
What is that an ETF on, Zach? XRT.
XRT is retail sector.
Okay, retail.
So possible support in the 69 region for one more high, because this does need to count as a WXY. And that's, you know, usually your corrections in Elliott wave are ABC moves and you have 5 waves in the C wave. So sometimes you get what looks like a completing pattern that only has 3 waves in that what would be the C wave position. So you count that as an ABC and a Y wave. But we always allow for the potential to get that 4th and 5th. So we're going to be looking to see, does this look like it's starting to get 5 waves down as a wave 1 start of this wave 1? Or is it looking clearly corrective into that possible 69 region of support to warrant a play for an extension towards the 82 region?
So the miners have had a very powerful first wave out of the hole. Are you on that page?
Yes.
That's like wave
we can talk about the metals too.
Yeah.
I actually am on the fence still about calling this a nominally higher low for an alt wider version of this wave 2, since this was not the best 5 waves up and this retrace came so deep, but it did hold as being valid still for the 1-2 start to the 3rd already. So this is certainly a wave 1, but it may not be necessarily wave 1 of this 3. It can already be wave 1 inside the heart of the 3rd of the 3rd. So, you know, I would like to see a little bit of a move higher into the 30, close to the 32 region, and then a little bit of a consolidation. But if we are inside the heart of that move, the gentleman's entries, as they say, could be few and far between. So may get what looks like that more of that 5th wave extension of wave 1, but it just decides not to turn back. So a lot of really, really good setups in the individual names that Garrett and I are following closely. And some of them only just, you know, Newmont, like the weakness that we saw in GDX was probably a lot of that was because Newmont was filling out this ending diagonal down to 618 retrace and only just looks like it bottomed.
Yeah,
so
it had the weakest rally.
But it really is the bulk of GDX and has the biggest pull on the market.
Okay.
So
you're expecting, you think we're done with wave 1 and we'll be into a pullback on Newmont from here?
I mean, at a very, very small degree.
Yeah. Okay.
Yeah, I mean
28,
this is it
32.
wasn't a clean 5 waves up.
Okay.
Yeah, 32, low 32s would be the most ideal. And that's going to be a wave 2 inside what's
Yeah.
probably a leading diagonal for wave 1 of a bigger wave 1.
Yeah.
Or it gets an ABC up for wave 1 of a leading diagonal for the parentheses wave 1, but really, really good risk reward off of that low in the 29 region for Newmont. And
Do you think
Mark just put out an
Oh, go ahead. I'm sorry, Zach. Go on.
Oh, no, go ahead. Mark just put out an article on Seeking Alpha on Newmont. So he's writing articles for us, and it's a good article.
Okay. I forgot what I was going to ask you. Oh yeah. You know, are you old enough to remember when platinum traded at $1,000 premium to gold? Because it looks like that spread might be turning here.
Platinum is certainly pretty weak, but has potential to be still working on a major wave 2 as a 1-2 start to this bigger diagonal off of the 2020 lows.
Okay.
But I think we can get some more weakness first, where it's gold is at about $1,000 premium.
Yeah. All right. So you're looking for new
Right.
lows in platinum. How about silver?
Not
Really?
aggressively.
Yeah.
I mean,
All right.
it's technically it's holding. I mean, this was just a very, very weak move off of a very deep retrace. So,
All right. How
but
about
it is
silver?
still valid.
Because we're up against the clock now. Silver look better than
Oh,
platinum.
okay. Yeah, silver looks pretty good. Really nice 5 waves up here. Can get a fade back to the 23s. But I wouldn't be aggressively looking for that retrace. If I'm lightening up a little bit and looking for some consolidation to get back in for whatever I lighten up, but not aggressively, certainly not looking to short silver right here for a smaller degree wave 2.
Yeah, because the gold silver ratio fell apart this week.
Right. And I'm looking for that to head a lot lower.
40?
I would love to get it down into the 50 region. I don't know about 40s, but that's going to take a while to get there. And so far we really haven't seen silver really outperform. Right.
Yeah.
I'm wondering if you guys have talked about the very noticeable difference between gold futures and a lot of the gold ETFs. Because the futures got this massive spike in December. And so for them, that looked like all of this A wave. But the GLD ETFs and all the other, gold ETFs look more like they're finishing up 5 waves up as this C wave for the larger version of the A wave, only now into that same region that the GC futures spiked at the beginning of December.
Okay.
I'm not exactly sure. I'm tracking both potentials. On GLD and the ETFs, they should get more of a 4-5 and then allow for at least a wider consolidation. It doesn't necessarily have to be so deep, but as this larger degree, minor degree B wave. Whereas on gold itself, well, at least on the futures, ideally those count better as wave 1 of the larger degree C wave already and are going to hold a smaller consolidation as wave 2, as opposed to getting a B wave that might come back down into the low 2000 region.
Okay. Yeah, I like that level.
But right. I mean, but certainly on looking at other momentum indicators, this is a pretty strong move that flipped momentum back into the bullish case for gold in general. And hopefully the miners start to take advantage of that.
The silver
as
miners,
the kind of leverage trade that they are.
Endeavor and what's the other one? Fortuna. They've had dynamic.
Yeah, Fortuna's great. Wheaton, I like Wheaton a lot as terms of a more heavily weighted silver miner. It got past this resistance for the potential for one more low. Very much like GDX, though, it came within a few pennies of invalidating the 1-2 of wave 3 off of the October low, but that still holds as valid. So you can count this as an alt wider running flat for the wave 2 and be restarting this degree wave 1. But at the end, that really doesn't quite matter. I think this is probably enough for wave 1, but I wouldn't mind
SILJ
getting
actually took out that low like with a stop hunt under $8.
right. Yeah, I like to look at the individual names. I mean,
Okay.
I like GDX and GDXJ, but SIL and SILJ, there's just too few names to get a real accurate reading for an actual index. And so you get some skew issues, with it breaking that low. And so it's restarting something new off of that. It's not as reliable. I'd rather trade the individual names.
Well, you know what is reliable? You making your presentation and talking about alternates at the same time. And what you like, most people will just talk about the wave count. You'll even embellish it with confidence level in the wave count based upon price action. So really appreciate you coming every time you do, Zach,
Thanks, Dale.
edifying our
We
community.
do really like energy names, if you have another minute.
Oh yeah, we do.
We've we were looking for a fourth wave consolidation. We initially wanted it to be an A, B, and a C wave down into the 60 region. But it filled out as either the running flat into the June low here, or a triangle into the January low more recently. And again, XLE is an index, so there's charts, individual energy charts that argue more for this being the low, and plenty that argue more for the triangle and just starting the move up as the fifth wave off of that low. But a lot of them, certainly all of them, should be holding the January lows at this point, whatever low they made in either of the way of counting that, and are looking really, really strong off of that low. Most things we're counting as a larger diagonal. So the fifth wave should be an ABC move. And a lot of the ones that do look like they bottomed back here in May or June look like an ABC up for the larger A, whereas the stuff that bottomed here in January can be working on just 5 waves up for that A wave. And a few things look like, they can get a 5-wave fifth, but for the most part, there's a lot of agreement in most of those energy names, and a lot of them pay some great dividends. So we've been following a lot of those very closely, and that's the bulk of our newer wave setups for any equities in the last couple months have been in the energy sector.
Interesting. You get paid while you wait with the dividend.
Exactly.
Right?
Which we're not fans of chasing dividend in general. A lot of like the REITs and other stuff like that, especially the commercial real estate ones, look terrible. But now that we've had the better part of 2 years of a nice consolidation, a lot of these energy names look fantastic.
All right, let's wrap it on that. You think it has to do with the Middle East could be a problem this summer? I've heard that oil demand has increased in Europe quite a bit, which is, counterintuitive to all the recession talk we're getting about Germany.
Right.
So, the WTI trying to close over 80 for the first time in a while. Does that line up?
Yeah, I follow crude. I follow crude futures a little bit more than WTI. I'm actually going to look at my USO chart because it's a lot cleaner. My oil futures chart has a lot of smaller degrees on it that make it pretty crowded. So this can still be just wave 1, a little bit higher here as an ABC up. I'm certainly open to being further along in a C wave off of the December low. It's a little bit too big now, certainly in crude futures for this. Initially, I was looking for this to be 1, 2, 3, 4, and a fifth wave of a leading diagonal. For wave one, now it looks more like this is ABC up for wave one of an ending diagonal for the whole C wave. But some things, more of the energy names in XOP fit this potential where they can try for some of a wave two. But some of these can be already, this can be wave one and wave two, and this is an AB, and it's starting the third of the diagonal already off of a smaller start. So
Okay.
crude is a little bit harder to count that way because this was so much smaller relative to what we normally expect for wave one of a diagonal. But certainly, even though there's some potential for a little bit of chop in the near term inside the start of this move, it should be resolving nicely higher towards the 90s in USO and on crude futures. That takes it up towards the 102 region as the measured move.
Okay. Thank you so much, Zach. How do people find you?
On Twitter at ZACMANNES, or whether on Seeking Alpha or at ElliottWaveTrader.net, you can check out Stock Waves and the Metals, Miners, and Agriculture service. And I share general equities, S&P, and some stuff in the main room there as well. And the bonds.
Did you know that R.N. Elliott was OCD, obsessive compulsive? Do you know why?
That tracks.
He had to
Why?
wave. He had to wave at everyone he saw.
I like that.
I made it
I
up.
like
What
that.
do you expect? I'll keep my day job. Anyway, thanks again, Zach. Hope this is a great year for you, and appreciate your hard work. Zach
Thank you very much,
everybody.
Dale. Good to be on as always.
Okay, buddy. That's a wrap, everyone, for me for the week. You could join the team in 9 minutes on the Morning Edge, and people are thanking you. Zach, you probably left already, and you're welcome, everyone. Have a good weekend, and we'll see you on the trading floor next week. Don't just count your pips, count your blessings. Adios. Thank you, guys.